Hi, good afternoon. You're watching Closing Trades on ET now. I am Snehi Shah, and let's take a look at the way the markets are panning out right now. All in all, a very positive day of trade coming in for our markets back home. A 0.7% uptick for the Nifty at the highest point of the day is where the Nifty 50 is at. Similar move coming in for the Sensex, but it's actually Nifty Bank that has seen a very good recovery coming in. Yes, it managed to open in the green, but from there we have been consistently building up on the Nifty Bank. Let's pull up the Nifty Bank and take a look at what that's once doing. A 0.4% uptick coming in on the banking index. It's Shriram Finance, a 4.2% uptick coming in. We've had management commentary from the press conference earlier today on the back of that 20% stake purchase from MUFG, wherein Shriram Finance has said that the management control will largely remain with them and they have no plans of turning into a bank as of now. Those were some of the key takeaways from the Shriram Finance presser. So 4.2% uptick coming in on Shriram Finance today. That followed by Infosys and Wipro, both seeing a 3% uptick today on the back of the surge that we had seen in their ADRs over the course of the weekend. Yes, those ADRs managed to settle, but it's sentimentally positive for these stocks, which is why some of them are doing really well. Trent is doing very well today, a 2.5% uptick, as is the case with Bharti Airtel. Tech Mahindra, their commentary has been bullish on their growth plans ahead. Hindalco, Tata Motors BV, JSW Steel, a lot of them are doing very well. On the flip side, the select handful losers in the Nifty 50 group of stocks is Tata Consumer, SBI Life, HDFC Life. So perhaps some of the life insurance counters are not doing all that well. But from the broader end of the market, the exuberance is wonderful. The breath is cheerful today. Nifty mid-cap doing well in tandem with the index. Nifty small-cap is outperforming the index right now. A very good move coming in. In fact, the mid-cap has also picked up some steam, but the Nifty small-cap, a 1.2% uptick coming over there. The advance decline ratio very steeply in the favor of the advances, so nothing to complain over there. Sectorally, of course, the day of the IT stocks today, a 2% uptick led by Persistent Systems, followed by Nifty Metal, Pharma, Energy, FMCG, Auto, Bank. Even Nifty Realty, that is the least sectoral gainer, is at least in the green, and 0.1% uptick coming in on Nifty Realty, with Anantraj, Phoenix, Sobha, some of these names doing very well. Now, on the back of some news flow, KEC International is doing well today, as is the case with some of the shipping counters. Pull up a Cochin Shipyard, Mascot Docks, all of them seeing gains between 5 and 7%. Garden Reach also doing very well. You have Nalco, Hindalco, RVNL, BEML. So a lot of these defense, infra, railway, that's the theme of the market today. Lots of exuberance over there on the back of the trade deal with New Zealand that's close to being signed, and overall the market positivity that some of these themes are seeing. They have been really good, and also on the bunch of couple of order wins. That is how the market is shaping up to be like right now. But let's shift focus and talk about the wires and cables industries. Want to see what KEI, Polycab, some of those stocks are doing in trade right now. Good moves coming in on the back of the Morgan Stanley note. That is looking cheerful for some of these names, because Morgan Stanley has given an overweight rating to the wires and cable sector, expecting stronger growth in the second half. My colleague Rabinder is joining us with more details from the brokerage note. Rabinder.
Well, as Morgan Stanley has come out with a note on wires and cable sector, where they have said they see a sector has a multiple demand tailwind amid the conductive macros, and Morgan Stanley sees a strong demand across T&D, renewables, real estate, infrastructure, and rooftop solar are driving healthy domestic cables and wire volume growth, and the channel continues to restock amid inflationary commodity trends. And Morgan Stanley say that the H2 FY26 will be better as in terms of volume as compared to first half of FY26, and they estimate there is about a more than 80% probability for the scenario, and they estimate profitabilities are illustrative and assigned subjectively based on their assessment of the likelihood of the scenario. And for Polycab, they have maintained their overweight rating and high target price to rupees 9,373 as compared to earlier target price to rupees 8,672. And for KI Industry, they have maintained their overweight rating with target price to rupees 5,164 as compared to earlier target price of rupees 4,793. So back of this bullish note from the Morgan Stanley on the wires and cable industry, both Polycab and KI Industry is up more than 2 to 4%.
walking us through that. So yes, Morgan Stanley continues to remain bullish on some of these wires and cables play. We'll understand what that means on the charts as well. We have Mr. Lakshmikant Shukla from Yes Securities joining us on the show. Lakshmikant, good afternoon and thank you so much for your time. Before we delve into some stock-specific action, talk to us about where are you seeing the markets headed. We've seen a very robust move ever since the market opened today. We've only been able to build, to hold on to and build upon the gains that we've seen at open. From here, where do you think the markets head given that we have 2 consecutive expiries this week?
Good afternoon to you and thank you for having me on your show. As market has given decent breakout from its falling trend line of the levels of 26,100, and then after we have seen a significant upside move in Nifty, so we expect that this momentum will continue. I think next resistance is seen near the all-time high level of Nifty, which is placed around the zone of 26,300 to 26,325. Actually, we have got these Q when Nifty has made double bottom kind of pattern near its 50 SMA levels, and from there we have seen significant breakout on the upside. And today is also given the breakout from its double bottom pattern. So I think this level should be hold, and we will see further upside move toward the levels of 26,300 to 26,325 with the support which is again shifted higher toward the levels of 26,000 from the levels of 25,850, whereas sacrosanct support is seen near the levels of 25,700. Until Nifty hold these level, we will see upside momentum in our market. Beside this, Bank Nifty is still struggling hard to surpass the levels of 59,500, and on Friday it has made doji kind of pattern. Still, it is facing resistance from its falling trend line. But I think if it able to surpass these levels of 59,500, then after it will also move higher, then it will also give challenge to the lifetime high of 60,100. But the most important is that we have seen momentum in the Nifty Mid Cap 100 index, which has also given falling trend line breakout with the bullish candle formation. So we expect that in outperformance from the mid cap space.
Okay, so exuberance being seen in the broader end of the market. But Lakshmikant, what is your take on Nifty IT? We'll come to you with that view in just a bit. Before we do that, let's take a look at the stock of Jupiter Wagons. The stock is doing very well. The promoter has acquired additional equity shares through the conversion of convertible warrants in Jupiter Wagons. And Shristi is here to tell us more in terms of what this means in terms of promoter holding. And Shristi, the reason why the stock is doing so well today.
Well, yes, because it's a positive news flow coming in for Jupiter Wagons, where the promoter Tatrava Goenka has actually raised 0.6% stake into the company, and for a stock which has been hammered all throughout, because in this particular year itself, the stock has seen a downfall of almost 45%, and at one point in time, the stock actually peaked over 700 rupees back in July 2024, and from those levels, we have seen tremendous pressure on Jupiter Wagons. We'll talk about the reasons, but the point is that after having so much of massive fall and witnessing so much of massive fall, even the slightest of the positive news flow can definitely boost the sentiment, and the stock is holding a gains of 13% as we speak right now. But along with that, if you look at the promoter holding as well, so in the past couple of years that has been shrinking, because if you see a total promoter holding back in December 2022, that was close to 74.62%, which in September 2025 stood at 68.1%, and in that Tatra Goenka has actually raised the stake by 0.6%, and now their stake stands at around 19.24%. But along with that, let's also have a look at why the stock was underperforming so much. What are the reasons for that? Because from FY20, we have seen a very good trajectory in terms of their financials, especially between FY21 and 24. The revenue CAGR was over 50%, which in the next couple of years did slip to around 14%. Yes, the valuations were high, and even the business was actually witnessing some bit of a slowdown in terms of their wagon, and along with that, their volumes that was actually below the street estimates. So these factors really made the stock quite underperforming one with respect to the benchmark indices as well. But now is the confidence coming back? That's the key question. A couple of triggers that we highlighted for our viewers. Firstly is of course one of their their plant executions that the company is already planning. Recently, they raised the funds with respect to the QIP that was close to around 800 crores. That was for forged wheels and axis plant execution. The exports are expected to boost their overall financials in the times going ahead, and the EV logistics arm is expected to scale up. And one of the other factors, that was the wheel set availability that was impacting the stock performance and the financials. That is expected to improve going ahead, and maybe these are some of the factors that can definitely do well for Jupiter Wagons. But at a time where the promoter has actually gone ahead and raised the stake, that indeed is a big positive, and the stock is also quite excited. Back to you.
Buzzers in there. In fact, as we look at the screen right now, well, the Nifty has managed to hold on to those early morning gains. In fact, if nothing, built on a little bit to that mark, and we're closing in that 26,200 level. Look at a Mazgaon Dock, look at an RVNL, a Solar Industries, Nalco, of course, is a big mover today, and MCX as well holding higher. But as a cluster, if you see sectorally, it's chemicals, metals, and IT. They are the ones which are actually ruling the roost. Lakshmikant, wanted to get you in on some of the charts on the IT names. Friday, it was a KPIT. It was the Tata Elxsi which held out. Right now, too, you're seeing the large caps take the lead. Wipro, Infosys continue to look good. Any further trading opportunities, you think, or ideas within the IT pack?
See, a few days back, Nifty IT has given consolidation breakthrough, and then after it has started making higher tops and higher bottom. Now, looking at the chart of whole Nifty IT index, it is going to retest its June month swing high, which is coming around the zone of 39,500 to 39,600 levels. So that would be the key hurdle for the Nifty IT. So we expect that if it able to give breakthrough of this level of 39,500, then we will see further upside move in the Nifty IT. Within the IT space, we are positive in Wipro, SCL Tech, and Infosys. I think these are the three stock within the large cap IT which could show upside move. If we talk about Wipro, so I think we could see further gain in this stock toward the levels of 284 to 286. However, if we talk about Infosys, then further upside move could be possible toward the levels of 1,720 to 1,740. And even if we look at the structure of SCL Tech, so this stock has been showing resilience in the falling market, and now it is again started showing upside move with the formation of bullish candle. So further consolidation breakout could be expected once it surpasses the levels of 1,680 to 690. Then after this stock could gain momentum and it could inch higher toward the levels of 1,750.
Okay, so that's the take on some of the stocks from the IT pack. But on that note, we'll slip into a very short break. Be right back with our technical guest with us. But we'll also have Nimesh Chandan from Bajaj Finserv Asset Management joining us on the fundamentals and the deeper dive over there. So stay tuned and we'll be right back.
Quite okay, 26,200 inside on the Nifty futures. IT, some of the defense, railway names are the ones which are the liquid buzzers in trade. It's good to see that the breadth of the market as well is holding out and not just the large caps, which had been the trend the past month or so. So 151 stocks standing to the advances right now, with a handful of 61 standing to the declines. Of course, there are days where one has seen better breadth, but it favors and is tilting in favor of the greens as we speak right now. Shriram, Wipro, Infosys, Trend, Bharti, they are significant movers from within the large caps, and Mazgaon Dock, 5.5% of an uptick there. RVNL, which is holding up a good 5% in trade. Solar Industry is up 5%. Nalco, of course, has been a very strong mover from the word go, 4.5% of an uptick. And then MCX, which is also holding higher in excess of 4% as we speak right now. But let's welcome on board Nimesh Chandan as well and find out what he's making of the market right now. Nimesh, hi, afternoon. Good to have you on ET now. Just wondering what the color and texture of the markets in 2026 is going to be like. More consolidation, you think, or do you think it's time that we will see a slight bit of a move up?
So we are quite bullish as we enter into 2026. If you just rewind a year back, and if you are sitting here in January 25, and we would discuss, okay, we forecasted that there'll be geopolitical issues, wars, India would end up paying the highest tariff to the US, rupee will depreciate to 91, 92, the FIIs will keep selling throughout the year. And yet, if you tell me that Nifty would touch a new high and 10-year bond yield will actually go down by 25 bips, I wouldn't have believed it. But through the year, we have seen certain positive developments which have given tailwind to the economy, to the profits, to the earnings growth in the second half of this fiscal. And I believe those will continue to push earnings growth and economic growth in the coming year. And these are steps taken by the government, revival in consumption demand, revival in capex. So these are all positives that we are seeing in economic cycle, in business cycle, in financial cycle that we are getting into 2026. So we at Bajaj Finserv Mutual Fund, we are quite positive.
Okay. And Nimesh, hi, good afternoon. I remember earlier in the year when we were interacting with you, you did mention that a mismatch or a lack of liquidity flows could affect the volatility in the market. But just zooming in on the last 3 sessions and the kind of FII buying that we've seen in the market, do you believe now FIIs have made a comeback for good? Are there props in the market? Are there levers in the market that could be leading to this FII buying to be sustainable?
So there are many reasons why India is positioned attractively. It's a fantastic diversification. It's an economy which is fastest growing. Earnings growth is reviving. So if you take from FY25 to 26 to 27, you're not only seeing earning growth, but the growth rate also increasing. So all these are positives. Actually, I would hesitate to draw a trend over a 3 day, three data points in the last 3 days. But these are definitely comforting that now there is less selling or more buying on positive days from foreign institutional investors. And looks likely that this will continue, although it can't be guaranteed as such. But India is definitely an attractive destination, especially after the time correction that we have undergone. See, India will not be trading at a discount to other emerging markets. There are certain characteristics of Indian corporates that make us trade at a premium to other emerging markets. But though that premium has come down significantly, and I think it's time for a catch up next year.
Okay, so that's your take on the market right now. Nimish, the favor still remains tilted towards the large caps right now, or are you still seeing some scope of value and some valuation comfort in the mid cap and the small cap end of the basket now that we've seen a significant cool down from the highs?
So we've been positive on large caps since last 1 year, and we believe still there is scope for growth from there. Our intrinsic value, if that we calculate for Nifty, ideally currently in December, it should be about 26,700. So we are little lower than that, and this intrinsic value, as we roll over to the next year, will also go up. But recently, we've also become quite positive on the small cap space. There has been a sharp correction in small caps, and there has been a good divergence even within these 250 small cap companies. There has been a huge divergence of performances. There are many stocks which have corrected more than 20% in this year, and where business is good, management is good, and valuations have now, after a correction, become attractive. So while it is difficult to just generalize a average price to earning or a price to book for small cap, but there are many opportunities that we see where small caps are now at an attractive zone, and you can create a good portfolio of about 80 to 100 good small cap companies.
Interesting. So give us some color, Nimesh, on themes within small and mid caps that you're looking at.
Yeah, so interesting question. We look at mega trends. We believe that companies that benefit from certain changes in economy, in global businesses and domestic businesses tend to have a tailwind for growth. And as their profits grow, the stock prices follow. So we track mega trends, and within that, we see some very important changes that are coming. So if you look at banking and financial services, we see a strong adoption of AI, also digital payments, participation in capital markets. So those themes will drive financial sector. Within healthcare, we very positive on CDMO companies, the custom drug development manufacturing companies. Here, these are the companies which are benefiting to some extent from the Biosecure Act that just got passed in the US. These companies have a strong order book, a strong track record of growth, and there is huge scalability ahead of them. So that's an area that we are quite positive on. We are taking some contrarian calls. So right now, we had taken some contrarian calls on metals, which has actually unfolded very well. We are positive in the entire consumption basket, but we find some picks in real estate very attractive, where they have done well, they've deleveraged their books, and the festive season sales have been, their numbers have been quite strong. So those we like. Consumption as a basket, if you see for the last 2 years, many small caps and mid caps in this category have underperformed. The investors have been too much focused on the capex side of the stories and less on the consumption side. From this quarter onwards, we'll see a pickup in consumption. So anything which are, say, related to real estate, home improvement companies, for example, paints, tiles, faucets, and wires and cables. So those we like. We like many food delivery companies where the valuations have corrected, the quick commerce companies. We like some in staples also, where we see higher growth rate, new product introductions also being there, and a lot in consumer discretionary side also. This is a space where you get quality growth as well as now valuations.
So those are some of the pockets you're liking. But Nimish, you did speak about the whole real estate and the real estate ancillary theme, anything close to home building. But one sector you didn't mention, I'm curious about this, is cement. Your outlook on cement next year, given that we've seen absolutely no price changes in cement internally, and the stocks also have not done all that much this year. Do you believe because it's been such a lackluster year for cement, next year we could see momentum on either end for it?
Actually, yes, that's an interesting point, and I somehow missed that in my initial comments. After the price correction and the time correction that many of the cement companies have delivered, I mean, have seen in the last 1 year, we see some upside there also. However, when I look at in terms of risk reward ratio or the highest upside, I see many other sectors, but cement also will deliver positive returns in the next year, it looks like.
Okay, so that's on that. But Nimish, your outlook on IT, given that very recently we've seen a good outperformance coming in from IT compared to the other sectors, but IT is also coming from a very dull phase. Do you believe that now is a good enough time to start allocating a little bit towards IT to just see where it goes from here?
I think last year the sentiment was extremely negative towards IT because most of the players, our investors, were focused on pure AI plays globally as well as domestically. So, which are the companies which are purely involved in AI data centers and so on. But now I think people are realizing that in terms of implementation, in terms of project flow, even these guys would, Indian companies would benefit. The valuations are attractive, and many of them are at very high dividend yields, like between 2.5 to 3.5, or sometimes 4% dividend yields. So attractively placed in terms of valuation, sentiment is now better. However, I will also put a caveat here that this is not a typical season where IT numbers start looking extremely good. So the December end numbers and March end numbers, because of lesser working days, may not be so great. But yes, the outlook from the sentiment side has improved for them, and they may see a rally to some extent.
Right. Okay. Nimesh, great to have you on the show today. Thanks for your time.
Pleasure being here. Thank you.
Okay. Well, since we are on the subject of IT, how can you forget about Infosys ADR and the kind of surge that happened in a very unusual move on the back of the extreme short squeeze when the stock actually jumped up, or the ADR jumped up in excess of 50%. But what does it really mean? We had Feroz Aziz from Anand Rathi Wealth join in earlier today to break it down for us.
If people sell an option, if the underlying instrument keeps coming closer to their option, they need to buy this underlying to hedge themselves. So a lot of other algos can create a short squeeze. That's what happened in India, right? Remember, SEBI had actually penalized one of the FIIs, saying that you have been manipulating the market, but it's basically legitimate strategies to squeeze somebody's position using the underlying, and that's what ended up happening. So ADRs are very inefficient to hedge for a delta hedger. and that's what happened. And that's a short gamma event, which was capitalized by an algo. First, one or two fundamental reasons can push an underlying up by 3, 4, 5%. The exaggerated move is because of the short gamma. Positions built, and any option trader who's been in the market for long enough, he can understand how much short gamma buildup is there.
Back with closing trades, and it is an 18-hour news break confirmed, because remember, in October we told you that Motilal Oswal was the front runner for acquiring a minority stake in Sensex, and that has happened. Motilal Oswal Alternatives has invested $72 million in Sensex medical instrumentation. They've acquired a minority stake on the back of this, and remember that Sensex is a medical devices firm. It's based in Hyderabad, and they produce equipment like electrolyte analyzers, glucometers, and a whole lot of other medical devices. And this was founded by Ravi Kumar Merua in 2006, and this is exactly along the lines of what ET Now had reported on October 1, to be precise, that Motilal Oswal was the front runner to acquire a stake in Sensex, and that has happened. So yes, that's an 18-hour news break confirmed for you. But the other pocket of stocks that is doing well is the defense basket. We'll get my colleague Kanishka on in a bit to talk about that. But some other stocks doing well today is the entire railway group of stocks. You have Jupiter Wagons, that's up 18.5%. Shrishti was with us earlier to tell us why. This is on the back of promoter buying further stake into the company. You have some of the shipping names like Cochin Shipyard, Garden Reach, Mascot Dock, that's doing well. KC International is doing well now that the Delhi High Court has allowed it to continue vying for projects from Power Grid and bidding on those tenders. So also a positive move over there. Lakshmikant, your view on some of these defense or railway counters? We've seen a lot of momentum in these stocks last year. They've not done all that much in the recent past. What is your takeover here?
Since morning, defense and railway stock started buzzing, and we have seen positive upside move, and due to which most of these stocks has formed bullish kind of formation on the daily chart. So in defense space, I think we are positive in Bharat Electronic Limited. So stock has seen resilience around the levels of 50 SMA, and from there we have seen rebound with the formations of higher tops and higher bottom. So we expect that further upside move in Bharat Electronic Limited toward the levels of 415 to 420. So that would be the expected upside target which we are expecting for the Bharat Electronic Limited. Apart from this, in railway space, I think Titagarh has given the breakthrough on the upside above the levels of 800. Since last so many days, this stock was the underperformer, but in today's session, the way it has given the breakout, so we expect that this stock could stretch higher toward the levels of 840 to 850. So I think this one of the good option for taking swing trade with the stop loss of 790 on the downside, and can expect upside move toward the levels of 840 to 850 range.
Okay, well, what one can really spot as the trend is defense stocks, and they've been a buzz today, driven by a very strong mix of policy triggers and, of course, global tailwinds as well. In fact, the upcoming Defense Acquisition Council meeting has also raised hopes of faster approvals and emergency procurements, improving order visibility for domestic defense manufacturers. Kanishka is here with more on what could be the reasons behind the entire pack a buzz in trade.
Well, yes, defense stocks are buzzing in trade today on the back of a mix of cues, that is on the policy front as well as order visibility alongside global cues that we are tracking. Now, first up, let's talk about the key trigger, that is the policy trigger that could be in. Now, it's the upcoming Defense Acquisition Council meeting, which we are given to understand will take place on December 26th. Now, that could lead to emergency procurement, which is on the agenda. It raises expectations of faster approvals for critical weapons and equipment. Now, this could open up fresh order pipeline, especially benefiting domestic manufacturers under the indigenization push. So, yes, on the back of this news development that the DAC meeting could be happening on December 26th. Well, looks like we're seeing a sentimental push as far as the defense stocks is concerned. Now, like I said, market is already reacting. Defense stocks, they're up for the second straight session this time. Nifty Defense Index, that has gained nearly 4% in over the last 2 days. If we talk about specific stocks, Cochin Shipyard is up over 6%, MTAR Tech is up around 5%. GRSE, that's also up about 5%. Meanwhile, Mazgaon Dock, BEML and Solar Industry, they're also up between 4 and 6%. So yes, stellar moves coming in over there. Now, adding to the momentum are also geopolitical tailwinds. Now, the European Union, they've approved a 90 billion euro loan to Ukraine that's keeping defense, global defense spending elevated. Rising tensions in the Middle East, they're also adding to the risk premium for defense stocks. So these are some of the key reasons as far as the defense stock buzzing is concerned. They've been rallying up through the day. If we talk about stock-specific action, there's Apollo Microsystem, which is buzzing. It has received approval from DRDO for 2 transfer of technology projects. Now, the approvals specifically are for directed energy weapon system, which is a key next-gen defense tech, and that strengthens the position of the company in advanced defense electronics. So yes, that's the stock-specific, company-specific action as far as the defense space is concerned. But on the back of the DAC meeting announcement, or what we are given to understand that it is going to happen on December 26th. On the back of this, it looks like defense stocks are rallying today.
Okay, Kanishka, thanks so much for taking us through that. So yes, a bunch of defense stocks that are in focus right now. Lakshmikant, you have a view on any of these defense stocks, particularly Apollo Micro is doing well for itself, as is MTAR Tech. Your chart check on both of these stocks?
Talking about Apollo Micro, so the stock has seen a consistent decline, but if we look at the overall structure in today's session, it has also seen rebound and now trading with the gain of 5%. So I think now upcoming resistance is seen near the levels of 255, 256 levels. So if it able to surpass this level, then further upside move could be possible. From there, it could make gain the momentum toward the levels of 265 to 268. So I think with the support of around 238 to 240 zone, this stock could move higher toward the levels of 255 to 265 range.
Okay. Lakshmikant, talk to us about the move that we're seeing in Meesho. I know very limited recent chart history, so there's not much you will be able to gauge from the charts. But given the way the stock hit upper circuit last week, that stock saw new highs in the previous week, and today it's locked 10% in lower circuit. Any view on Meesho right now, at least on the charts? How is it shaping up?
Don't have much data to talk about. I'm seeing only a single candlestick movement on this stock, so I cannot comment on the support and resistance about this Nisho.
No worries. So that's Meesho. Remember, viewers, last week when Meesho was seeing a 20% upper circuit, it was on the back of a positive brokerage initiation coming in from UBS. But other than that, there was a short squeeze on the volume liquidity that we saw. About 44 to 46% of Meesho's free float capital compared to its overall listed market cap was out in the open being traded. So the volumes were extremely high. And on the back of both of these reasons put together, Meesho on Thursday or Friday last week hit a 20% upper circuit, but seems like that exuberance has faded off for Meesho. There's a lot of profit taking happening on that stock, and 10% lower circuit is where we are seeing Meesho at right now. Let's talk about a couple of stocks that are not doing well right now from the broader end of the market. It's Siemens Energy, a 5% cut over there. Hexaware is lower by about 5.25%, as is the case with Cholamandalam Investment, the parent company. Motherson Sumi Wiring, Dixon Tech, Home First, all of them are seeing cuts. Motherson Sumi, that looks like an interesting name right now, a 2.5% cut. Lakshmikant, any view on Motherson Sumi Wiring? This is the wiring stock.
See, you asking about M Sumi?
Yes, correct. But the wiring arm, yes. Not Samil, the Motherson Sumi wiring arm.
Okay. So, looking at the structure of M Sumi, so the stock has given witnessed a breakthrough on the Friday session, but in today's session, it had also witnessing the profit booking from the same levels. So I think now support is seen near the levels of 44 to 43 range. So holding this support, some sort of consolidation is expected, but fresh buying momentum could trigger once it surpasses the levels of 50, from where we could see rectangular breakout on the daily chart. and then after it will gain momentum and will move higher toward the levels of 58 to 60 range. So I think one should wait for this breakout. Once it crosses the levels of 50, then after we can recommend for the buying in MSUMI.
Right, okay, that's Motherson Sumi Wiring. Stock under pressure today, down about 2.5%. But as we step closer to the new year, we've got some of the biggest deals in the financial sector as well. In fact, with one of the latest being, of course, Shriram Finance and MUFG as well. But Mitali is here with a roundup on how some of the other mega deals have been all through 2025.
Right, so India's financial sector is actually witnessing an unprecedented move by the foreign investors. And also in 2025 alone, we saw a whopping 1.5 lakh or more than that actually 1.5 lakh crores of investments by the foreign investors in the Indian BFSI sector, signaling strong long-term conviction in the India's credit growth story. The recent one, of course, the Shriram Finance and the MUFG deal that was announced, where MUFG is going to acquire a 20% stake in Shriram Finance. That was the biggest one for this year and actually the largest ever investment made in the BFSI sector for the Indian markets. Now, the deal size was around 40,000 crores, but there were more other deals that were actually bigger, like the MUFG and Shriram Finance. Let's have a look at the couple of them. So it was RBL Bank and the Emirates NBD. The size was around 27,000 odd crores. And after the announcement, we also saw that the stock actually did not give much of the returns to the investors. If we talk about the Samman Capital IHC deal, that was around 8,850 odd crores, and post then the stock has actually declined by 15%. Yes Bank and SVMC deal was also on the line in 2025 with a deal size of around 16,000 crores, and after that the stock has surged nearly 3%. If you talk about the IDFC First Bank and the Warburg and ADIA deal, the size of that deal was around 7,500 crores, and the stock moved actually 35% post the announcement of that deal. Also, we had the Federal Bank and the Blackstone deal. The size of the deal was around 6,200 odd crores, and post the deal, the announcement, the stock actually surged around 19%. Now, if we talk about the valuations, from that perspective, Shriram Finance, the deal valuation was around 1.9x, but post that, we have seen that the stock's price to book valuation as of now stands at 2.9x. That means a re-rating has been awarded by the market to the stock. If you look at the IDFC First Bank, it moved from 1.5 times to 1.6 times post the deal. RBL Bank saw a modest uptick from 1.1x to 1.2x as of now, while Federal Bank's valuation, it remained static at 1.9 times. While these upticks that we have observed, there were also de-ratings that the stocks faced, like Samman Capital. The company's price to book value, it actually derated from 0.9x to 0.5x, and also Yes Bank, the post SVMC infusion, it trades around 1.4 times its price to book value. So with consolidation gaining pace, we actually have seen that FIIs have a kind of remains bullish on the India's BFSI sector. Taking us through that, Mitali. So yes, lots of big deals in terms of FIIs and foreign institutes investing in India's BFSI space, and the one that we've seen most recently has been the MUFG Shriram Finance deal. Now, in an exclusive chat with ET Now, Shriram Finance's Executive Vice Chair Umesh Revankar breaks down the rationale behind the MUFG deal. He also explains their growth roadmap and says they expect return ratios to improve and borrowing costs to come down. Let's go across and listen.
I believe the ROE will go up to 3.4 to 3.5 level from 2.8 level. So that is the kind of improvement we can see in ROE. Basically, what we are looking at is, because of the strong balance sheet, our borrowing cost to come down, because our ability to manage the borrowing much better. We are targeting a 20% growth on overall AUM. Yes. Definitely, we feel that there is a lot of opportunity, especially on the commercial vehicle and passenger vehicle. If you look at, after the steep increase in the prices because of the Bharat Stage 6 implementation, many people have postponed buying or upgrading the vehicle, especially in the commercial vehicle. I feel all this upgradation will happen, and people will start buying, and that will really help us to grow faster.
You want to talk business? Meet me in the on-board lounge.
Confused by the market noise? Benchmark your commodity trade with Big Mint's trusted price indexes. We know the pulse of the market. Real data, real markets. We are ISO audited. We have robust market methodology. Big Mint, trust the price. Trade with confidence.
In association with SBI, the banker to every Indian truly.
You know, जब भी घर की बात आती है, तो दो बातें सामने आती हैं। रेंट का घर या अपना घर। अपना घर हो, तो फिर दो बातें। इस बैंक से लोन या उस बैंक से लोन। फिर मेरी इन दो बातों पर फुल स्टॉप लग गया जब मुझे यूनियन बैंक से हैसल फ्री लोन मिला।
राज, मैं सलवार सूट पहनूं या जंपसूट?
अब इन दो बातों का कोई कुछ नहीं कर सकता।
यूनियन बैंक ऑफ इंडिया, अच्छे लोग, अच्छा बैंक।
2026, take notes. Manifesting for my little Miss Sunshine, tickles and giggles. Also want to be a biker chick this time. And dear 2026, only love for my people and myself to manifest my best life. Nature's cosmic energy.
Now mine, natural diamond intention pendants.
अगर शूज में फुल फ्लेक्सिबिलिटी चाहिए तो इन्वेस्टमेंट्स में क्यों नहीं? अब अपने इन्वेस्टमेंट्स को दो फुल फ्लेक्सिबिलिटी का एडवांटेज विद फ्लेक्सी कैप फंड्स।
टाटा म्यूचुअल फंड की एक निवेशक शिक्षण एवं जागरूकता पहल। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
Rohit.
Yes, sir.
We need to talk, okay?
That's Air India now.
Back with closing trades right here on ET now, and we're holding out quite okay. Defense, that's the pack which is really firing up as we speak right now. Pick up any counter, be it a GRSE, Mazgaon. The entire pack is holding a buzz as we speak. But Fortis Healthcare, that's announced plans to invest about 840 crore rupees to add more than 300 beds in Bangalore as part of its expansion strategy in the city. In fact, they've signed definitive agreements to acquire People Tree Hospital as well for a cumulative transaction of about 430 crore rupees. Meryl from our research desk joins in with more details on this deal. Meryl?
Fortis Healthcare has announced a major expansion in Bangalore and the stock is up around 2% in today's trade. It is acquiring the 125-bed People Tree Hospital in Yeshwantpur for an initial outlay of Rs 430 crores. This deal includes an additional land parcel nearby, giving Fortis a big growth opportunity. Over the next 3 years, the company plans to invest another 410 crores, which will mainly go towards two things. Firstly, adding new treatments such as radio-oncology, which is usually higher margin, and second, expanding the hospital to more than double of its current capacity, going from 125 beds to over 300 beds, using the additional land parcel included in the deal. The hospital in question did revenues of about 74 crores in FY25, and Fortis believes that there is clear scope to improve occupancy, revenue and profitability while simultaneously expanding capacity over the next 3 years. This deal significantly strengthens Fortis's presence in Bangalore, and once expansions are completed, Fortis could scale up to over 1,500 beds across the 7 hospitals in the city, compared to its current footprints of only about 900 beds. This deal is expected to close by the end of Jan 2026, subject to standard approvals.
Okay, Meryl, thanks for taking us through that. So Fortis Health is a stock in focus from the entire hospital space. The other one that we've been tracking closely today is KIMS. They've acquired an additional roughly 7% stake for 148 crores in Sarvejana Healthcare. This is a further stake subscription by KIMS. That stock is also in focus today, not doing all that much. In fact, it has sharply simmered down from the day's high and almost at the day's low right now for KIMS. Nonetheless, a 0.3% uptick coming on that stock. A bunch of other stocks have been in focus over the course of the weekend. Remember, KIMS was in focus last week as well on the back of their expansion in terms of the beds that they were adding to the capacity. So yes, hospitals has been a theme that we have been seeing a lot of buzz from over the last week. We have Mayuresh Joshi joining us on the show from MarketSmith India on the fundamentals. On the technicals, Ruchit Jain is joining us from Motilal Oswal Financial Services. Let's first come to you and get a sense from you, Mayuresh, on the entire hospital space. Is that a space that you're liking right now? We've heard news from Fortis, from KIMS, Apollo Hospitals has been in the news on and off. What's your take on this space?
Very good afternoon to you. No, I think we remain extremely optimistic on this space. 2 or 3 broad reasons. One, I think the expansion that a lot of these players are doing, both as a mix through the brownfield and the greenfield route, are going to be value accretive, specifically the brownfield investments, because the return on capital employed and the payback is going to be much faster for them. The asset-light model that they are following is also a step in the right direction because it reduces leverage to a large extent. And leverage probably remains quite manageable on a lot of hospital balance sheets. The second element in terms of medical tourism is expected to rise exponentially over the next few years. To top that up, the expectation in terms of domestic healthcare actually improving over the next few years, with organized players probably taking a lion's share as we speak through the mediums and the methodologies that they're probably adopting at this juncture, will leave a larger footprint, both in terms of inpatients, volumes, the kind of therapies that a lot of hospitals are offering at this juncture. Very critical therapies. They've got therapeutic therapies as well, right from oncology to all the critical elements that are probably required, which is going to be a huge help going forward. The third element in terms of the key parameters itself, including average revenue per operating bed for a lot of these players, the average length of stay, the expectations in terms of additions which are now happening. I think the standard is somewhere around 2.5 to 3 crores a bed. That is probably being adhered to as we speak in terms of expansions and capacity additions, which probably will mean that balance sheet growth, as I said, specifically ROCs, should probably continue growing at a healthy pace. So remain extremely optimistic on the sector. The rating rankings look robustly placed. We continue holding stocks like a Fortis, a Max Healthcare in our model portfolios.
Mayuresh, hi, afternoon. What's with the entire defense pack abuzz? It's that year-end push, or do you think there are many tailwinds in place right now?
Afternoon, Aisha. I think it's more to do in terms of a lot of news flow that is coming through. I think there was some element of a tweet where the US might do some exercises with India to probably counter China. We've already got exercises happening with Japan and Australia. And as we speak, in terms of a balance sheet outlay, defense, as we head into the next 2 months and the budget itself, defense should also get a decent share in terms of an uptick from last year's budget as we speak. Having said that, I think a lot of the defense players, Aisha, are already loaded with decent order books. So the revenue visibility of the book-to-bill ratios look reasonably strong as we speak. Margins have been relatively stronger as well. And there will be patches for all these players where a quarter or two execution might not be up to the mark. But over a longer term structural play in terms of how the sector is probably poised, it is probably poised for hyper growth as we speak. And balance sheets will be very, very different on a positive note over the next 5 to 7 years as they expand. So I think more orders coming their way, decent outlay for the sector as well. Reasonable margins, better return ratios, better efficiencies kicking in will mean cash flows also remain relatively stronger. So remain optimistic on this space also, but you need to be a little bit selective here because some stocks are really expensive as we speak, some fairly valued going into FY28 numbers.
Okay, so that's a take on the defense space. Ruchit, hi, good afternoon, and thanks for your time today. Give us a chart check on Devyani International. That stock has suddenly, caught my attention. It's doing really well in trade today. Last week it was up 5%. Today up another 6%. But on a year-to-date basis, the stock is low by 25%. How is the chart shaping up for Devyani International? And do you believe now that this stock has started to show some strength, is it a good time to look at this stock right now?
Yeah, hi, very good afternoon. Well, no, the stock has seen a good price-wise correction along with the broader markets over the last 2.5, 3 months. But the momentum readings on the daily as well as weekly charts have gone into some oversold territory. And on the weekly charts, we also saw formation of some reversal pattern, which generally leads to pullback move when no such pattern gets formed when momentum readings are oversold. So we expect a pullback at least in the near term towards 145, which is the 50-day exponential moving average. So pullback towards 145, 148 cannot be ruled out in the near term. Although this would not change the overall trend, which has been a bit on the negative side, but at least some relief rally can be expected here.
Interesting. Okay, that's what you're seeing right now on Devyani International. But I'm just looking at a Mazgaon dock, which is holding up about almost 5.5% as we speak right now. There's RVNL, a solid 5% of a dash, Solar Industries, MCX, and of course, Nalco, call it the silver effect. That stock has been holding very, very strong indeed. But Ruchit, if you had to really make a comparison between Hindustan Zinc and Nalco, which are both turning out to be silver plays right now, what's looking stronger and where do you think there is trading opportunity on the upside?
So in fact, both have been stronger stocks over the last few weeks when the markets had not done well. And we can clearly observe that both the stocks are not even breaching their respective 20-day EMAs, which are short-term moving averages. So I think overall trend remains positive, but in terms of the risk-reward ratio, I think Nalco has still favorable risk-reward ratio over here, as the price of moves have started gaining volumes right now, and the major support for the stock is now around 272, 270. So the downside seems to be limited over there. Hindustan Zinc also, although overall trend is positive, we have already seen a good run-up move over the last few weeks, so that could continue. So if any existing long positions are there bought at lower levels, then they can continue to ride the trend in Zinc. Whereas if one has to buy any fresh positions to ride this metal's uptrend, then I think Nalco offers a good risk-reward ratio even at current levels.
Take on some of the stocks, Hindustan Zinc and Nalco to be particular, that have a lot to do when it comes to silver. In fact, for Hindustan Zinc, silver makes up about 30 to 40% of their annual revenue, and the kind of upswing that we're seeing in silver, a fresh high coming in on that precious metal, that's the reason why both of these stocks are in focus as well. But on that note, we'll slip into a very short break, keep the conversation going with both our experts on the other side.
Back with closing trades right here on ET Now. Well, some big news today, and India and New Zealand have sealed a landmark free trade agreement offering zero duty access on all Indian exports and covering most bilateral trade. The pact, of course, opens up key services sector, promises $20 billion of Kiwi investment over the next 15 years as well. And leaders say that the deal could more than double trade over the next 5 years. Sumita Karir, my colleague, joins in to tell us more about what could be the implications of this FTA.
Absolutely. So as far as the agri sector is concerned, that is one of the sectors that's going to benefit as part of this historic FTA that has been signed with New Zealand. Remember, it was closed in a matter of just a couple of months, about 8 months or so, that the FTA has been sealed. We're given to understand from India's Commerce Secretary that the signing of the FTA could take 3 months, as the legal scrubbing of the document, the FTA document, is currently on. And remember, this is coming in just as last week India also signed its FTA with Oman. Prime Minister Narendra Minister Modi and Commerce and Industry Minister Piyush Goyal were in Oman to sign that agreement. And Minister Goyal also stated that this is historic in the sense that this is the third agreement that India has signed with Five Eyes countries, Five Eyes nations. Earlier, we have signed with Australia, then with the United Kingdom, and now with New Zealand. Minister Goyal also stated that India is keen on signing agreements, trade agreements with complementary economies and not those that are competing. Now, since you mentioned about the agri sector, let me also bring a point about the agri sector in the sense that India has protected its agri sector, dairy sector, and all that comes under the dairy sector, cheese, etc. And India is not going to make any amends to the sensitivities that are involved. And he stated that New Zealand understood India's sensitivities around agriculture. However, as part of the Agri-Pact that India has signed with New Zealand, what's interesting to note is that New Zealand will be bringing in technologies in the agri sector, and they will be re-exporting of India's dairy products into New Zealand. That's going to happen. Minister Goyal also stated that since there is a clause of New Zealand committing to $20 billion to be invested in India over the next 15 years, we will be looking at manufacturing sectors, for New Zealand to invest into manufacturing sectors, into labor-intensive and some of these electronics and electrical sectors. He mentioned all of that as well. And the near-term target for India is to raise trade with New Zealand to $5 billion. But let's also look at some of the key sectors that are going to benefit as far as this FTA is concerned. So agri, dairy, education, sports, services, skilling, since visa requirements have also been tweaked. They have been eased for professionals going into New Zealand. Other than these sectors, the processed food sectors, engineering goods sectors, that's also important. Most importantly, New Zealand is, of course, providing for zero duty market access for 100% of India's exports. And that really is the big win that India has scored with this one.
Friends, this is a free trade agreement with New Zealand, which is both comprehensive and forward-looking, reflecting the vision of our two leaders, Prime Minister Modi and Prime Minister Lakson, to elevate the relations to much higher strategic levels, much more comprehensively, which will not only include trade, education, R&D and innovation, services sector in a very big way, tourism, sports. It's a very multifarious engagement, particularly to benefit our farmers and dairy through technical collaboration, which will help them upgrade quality, productivity, and therefore the incomes of our farmers and dairy persons.
Okay, that's the word coming in from the Commerce Minister on the recently signed and spoken about India-New Zealand FTA. It's in the works. It's going to be signed recently. Mayuresh, we've been signing these FTAs, like my colleague Sumita was mentioning, with the UK. We've done it with Australia and now with New Zealand. But the big one that we're waiting to hear about is the India-US BTA, the Bilateral Trade Agreement. On the back of that, do you believe that the fear that we started the calendar year with the uncertainty around that and the tariffs that came to play in April, from there, do you think the market has now largely put behind that fear, given whatever the consequence could be? The market is largely priced that in?
To a large extent, yes. And I think the market is also pricing in that at some point of time, over the next couple of months, the deal will get concluded. Now, in what aspect, in what proportions, I think that is a large unknown, but the market is sensing that the deal should get concluded over the next few months. And therefore, I think there is a sense of relief. And you would have probably seen that the volatility in the markets has probably gone off to a large extent. So I think the hope and the optimism is that the deal will come through over the next couple of months. And if that happens, probably I think the underlying of the market, which is a little circumspect as we head into the new year, I think those fears will probably go off and the markets will then start coming back to focusing on earnings, which in my opinion, again, should hold out very, very strongly. So again, structurally, I think India seems to be in a better position as far as earnings are concerned, a lot of macro data points. I think the feather in the cap will be if the deal is probably signed, which will give that impetus to the market, which is clearly lacking.
Right, okay, that's the word coming in on the FTA, although it seems that there is already some chatter opposing it from the New Zealand faction.
We have that tweet open. In fact, Aisha, it's Winston Peters, the New Zealand Foreign Affairs Minister, and he's saying that New Zealand first is regrettably opposed to the India Free Trade Agreement announced today. They consider the India-New Zealand FTA to be neither free nor fair. Regrettably, this is a bad deal for New Zealand. It gives too much away, especially on immigration, and getting nothing in return for New Zealanders, including dairy. Now remember, New Zealand is an economy that is largely agrarian in nature. A lot of their GDP comes from agricultural produce, dairy, and the likes on that front. Sporting equipment is another big up for them, but it's also on the back of the wood manufacturing that takes place over there. So largely an agrarian economy, and based on what my colleague Sumita was telling us, the kind of market access that we are blocking away from New Zealand in terms of spices, gems and jewelry, dairy, and a whole lot of other sectors where New Zealand could stand to benefit. I believe that is the reason why we're seeing this tweet coming in from the New Zealand Foreign Affairs Ministry. But yes, we'll see what happens down the road when it comes to this. But it's an interesting development that we're just hearing about from Twitter. But yes, let's shift focus once again to the markets. Ruchit, let's talk about some sectors that have been in focus, and it's the realty group of stocks that has been doing well over the course of the last couple of weeks. Some exuberance returning over there. Any names in particular that stand out to you from the real estate pack?
If you see the recent corrective phase when the broader markets have corrected, within the real estate basket, Phoenix Mills was one stock which clearly was a relative outperformer compared to the other real estate names. So I think overall trend there remains quite robust, where a high top, high bottom structure technically is still in praise with price up move supported by good volumes. So I think the sector as a whole, the downside seems to be limited from here on post the recent correction. But in terms of stock specific moves, Phoenix is one stock where we are really positive on. And we think that outperformance could continue in that name.
Right, okay, that's the take coming in on realty right now. In the meantime, let's move to an ET Now exclusive, and it seems that the IPO frenzy is going to continue even as 2025 is drawing to the close. Among the newest offerings will be from straight-run Bharat Coking Coal, a unit of India's biggest producer, Coal India. In fact, sources inform ET Now that Bharat Coal could very well launch its IPO really soon. Anurag Joshi, my colleague, is here with more details.
Bharat Coking Coal, a unit of India's largest coal producer, Coal India, is likely to launch its IPO in the coming 2 weeks. Bharat Coking Coal is a 100% owned subsidiary of Coal India, and Coal India plans to sell 10% of its equity stake through an offer for sale in the IPO of Bharat Coking Coal. Now, the IPO size, according to sources, will be 1,300 crore rupees, which gives a valuation of 13,000 crore rupees to Bharat Coking Coal. Bharat Coking Coal produces various grades of coal for industrial uses, and most of its use is for the power and steel industries. IDBI Capital and ICICI Securities are the book-running lead managers to the upcoming IPO. Coal India is planning to offer for sale about 466 million of its shares in the upcoming IPO. It's a 100% OFS issue. Coal India is the country's largest coal producer and is also a listed Maharatna.
Okay, so that's the exclusive story coming in on Bharat Coking Coal IPO. Thank you so much for that. Mayuresh, let's shift focus once again, pivot to the markets and talk about some sectors that are doing well. And it's actually all the sectors are doing really well right now. FMCG, auto, pharma, metal. But given the recent exuberance we've seen in real estate, metal and IT, they've ruled the narrative for the last couple of weeks. Amid this, what is your view on FMCG and auto? They were in focus when the whole GST announcement came in about the GST cuts. But after that, these sectors have not done all that much. Do you believe that impact has already played out, or it's going to take a lot of time from here to play out and we could to see some significant movement on the charts of some of these names?
No, so for FMCG in particular, I think the rationalization effect in terms of inventory will play out in Q3, and Q4 will see volume uptake coming through, because I think the rationalization only happened at the end of Q2. The elements in terms of better volume growth with prices actually rationalizing and coming down will play out for organized players. Input costs at the same time have remained reasonably benign, and that will lead to better absolute EBITDA and better absolute EBITDA margins for a lot of FMCG players. The second element in terms of the unorganized sector for a whole host of FMCG companies, with rationalization happening, I think they become very, very competitive with the unorganized space. And therefore, I think garnering market share from the unorganized players might be something that can be played out in terms of volumes, pricing, margins, and bottom lines over the next few quarters, to say the least. The third perspective in terms of cash flows already being very strong for FMCG as sector as a whole will continue remaining so. Valuations will remain on the higher side for the sector as a whole. But some stocks are looking attractively placed in our opinion. In the results gone by, our sense is Marico is something that we continue holding. Nestle India among the large caps have given a decent set of numbers in Q2, and if they continue, Q3, Q4 might be equally good for them. And one stock that we are watching out from this space is Tata Consumer Products. Coffee prices obviously a tad bit higher, but they're expected to pass that through as far as their North American operations are concerned, with price hikes expected to take place over the next few months. India Beverages, India Foods should do well. And therefore, I think even the Sampanna portfolio and the new acquisitions that have come through might actually play out positively in margin. So selectively, I think it looks good. For autos, I think generally, I think the demand trends have continued remaining strong. The structural story in terms of positive volume growth should continue for most stocks and most balance sheets within this sector as well. A large part of that has got priced in. There is no two ways about it. And therefore, henceforth, I think it will only be the outliers, stocks which will perform better than what the market probably expects, both in terms of absolute numbers when it comes to volumes, margins, will start performing in terms of relative alpha that they might generate compared to the whole sector. So we remain positive but selective on both the sectors.
Interesting. Mayuresh, curious to know if any of the recent IPOs, considering that was what 2025 was all about, did interest you, or anything that you're looking forward to, particularly in 2026? There's going to be some heavyweight names from NSE to SBI Mutual Fund, Zepto to Boat, Flipkart, Oyo. Strong pipeline for the next year too.
Oh, absolutely. I think we were looking forward to that. So out of the IPOs, I think a few IPOs were reasonably priced, but I think looking forward for the next year, it all really depends in terms of how the valuation stack up is going to be for each individual IPO. If they leave something on the table, as an example, State SBI Mutual Fund as an example, Flipkart as an example, I think those are new age businesses, specifically businesses like Flipkart, where if the valuations are at the right juncture, at the right valuation in terms of the cap table as well, I think that might draw interest. Apart from that, I think we've been very, very selective when we are probably subscribing or recommending any IPOs at this juncture.
Okay, so that's the take on the exuberance that we're seeing in the primary market right now. But once again, getting stock specific, a stock that's doing very well for itself is KEC International. We were talking about this stock when the show began. The reason the stock is doing very well today is the Delhi High Court has now once again permitted the company to bid for projects from Power Grid. Remember, a few weeks ago, the company was banned from doing so, but now once again, the company is open and permitted to bid for tenders coming in from Power Grid. Let's understand why this is such a material move for the company and what has led to the spike that we've seen in the stock today, almost a 5% uptick. My colleague Ravinder is joining us to explain just that. Ravinder.
Well, as a few weeks ago, Power Grid Corporation of India has barred KEC International from participating in the new tender for the 9 months, citing an alleged breach of the contractual terms and a development disclosed to exchanges on the March 24, 2025, while clarifying that the ban will not impact the ongoing project. And the action stemmed from the allegation of 2.5 lakh bribe paid for the favorable bill processing Power Grid contracts, and the following which the CBI registered an FIR from naming KEC and its senior executive to prompting the exchanges to seek clarification from the company the same time. On that day, stock was down more than 5 to 6%, and now yesterday on the key relief, the Delhi High Court has now stayed the 9-month ban allowing KEC International to participate in the ongoing tenders, including those floated by the state-owned transmission utility. So back of this battle win, KEC International is in focus, and the stock is up more than 4.5%.
Ravinder, thanks for taking us through that. Just want to pull up the long-term charts of KEC International and see what the stock movement has been over there. Let's see what the 3-month, the 6-month chart has been. Last 1 month, the stock has done pretty okay for itself, a 6.5% uptick coming in, but 3 months, yeah, there you have it. Almost a 16% cut coming in. Ruchit, how does KEC International look placed to you on the charts right now? We've seen a blip coming in of about 20% in the last 6 months, but recent recovery in the last 1 or 2 weeks. What does the chart tell you right now? Any upside that you're spotting on this stock?
So in fact, if we see a bit longer term chart, the stock has already been into a corrective phase since last 1 year. I think last year in December, the stock made a high of around 1300. From there, the stock corrected towards 700 up to 700. Now around 700, there's a good long-term support considering its weekly 200 EMA, which has not yet been breached from a longer time frame. And a pullback move with good volumes can be seen today from the support itself. So at least a pullback towards 800, 820, which is the 200 DEMA for the stock, should be expected. So stock is already into an oversold zone, already corrective phase has been done. So and a move towards 800, 820 is what can be expected going ahead.
Interesting. That, of course, is KEC. But once again, Ruchit, wanted to know what is it that you're making of the defense pack? I mean, Mazgaon, MTAR, the entire space is holding up. Any fresh opportunities to trade?
So I think if you look at the recent price volume action, we have seen a good price-wise corrective phase in most of the defense names. So an up move could be there in the near term, considering the oversold momentum setups. I think Mazgaon Dock is one where the volumes have increased gradually over last couple of trading sessions along with the price of move. And on the high side, the stock has potential to rally towards 2750, 2800, making the risk-reward ratio still favorable. Although up already 5% today, but still I think there is a room towards 2800, 2850 marks. So at current levels, one can go fresh longs as well, with a stop loss below 2400 for potential target towards 2800.
Okay, that's on some of those defense names and Mazgaon Dock in particular. But the other stock that's doing well today is Varun Beverages on the back of their acquisition of Twiza, which is a soft drink and beverage brand in South Africa. Now remember, this is largely in line with Varun Beverages' aim to expand their African operations. Just a month or so ago, when they had come out with their Q3 calendar year 2025 earnings, they had also spoken about their partnership with Carlsberg for South Africa and for Kenya, rather, not South Africa, but it was Kenya that they started with, and now they've acquired a soft drink brand that makes mixers, electrolytes, and a lot of those drinks in South Africa, and that's Twiza. So on the back of this acquisition, the stock is up 3.5%. Just want to see what the long-term chart for this stock is like. On a year-to-date basis, the stock is lower by 25%. Ruchit, on the fundamentals, yes, we've seen some blips coming in on the Indian front, but the international business seems to be picking up well now on the back of this new announcement of this stake purchase. On the charts, how is Varun Beverages shaping up? Do you believe the weakness that we saw in the first half of the year is behind the stock, or is there more pain left?
Well, in this entire calendar year, one thing has been consistent, that whenever the stock is showing a pullback move towards its 200 DMA, we are witnessing selling pressure over there. And today we are closing right around those levels, which is around 490. So I think the signs are positive today, considering that the volumes are better than average in the along with the price of move, but the follow-up action would be important. It would be important for the stock to surpass that 490 mark with such good volumes. Then we can expect a complete reversal of the entire downtrend that we have seen over the last few months, and we can see a rally towards 540, 550 in the short term. So while the stock should be on radar for tomorrow's trading session, could be important, a breakout above 490 can be used as a buying opportunity then.
Okay, so that's on Varun Beverages. About 8 minutes or so for the market to close. Just want to pull up some of the top gainers and losers that we've seen today from the broader end of the market. Yes, it's been the day of Jupiter Wagons. In fact, can we pull up the stock just to see if the stock has touched upper circuit? It has been growing gradually since the day is open, and yes, it's a 20% uptick for Jupiter Wagons right now. Cochin Shipyard, Devyani is up a solid 7%. Good move over there. Cochin Shipyard up 8%. RK Forging, Solar Industries, GE Vernova, TND. Ruchit, any chart check on this one? Do you track this stock on the back of a very important update coming in? There has been news on this stock today and it's positive for the stock. And in fact, we've had brokerage calls also after it received a mega order for the Khavda South plant, which is between 8,000 and 12,000 crores according to brokerage estimates. Ruchit, do you track the stock on the charts?
Yes, in fact, the mid to long-term trend still seems positive only. What you've seen that when the broader markets have corrected over the last few months, the stock has seen more of a time-wise correction where it consolidated within a range and there too around its all-time high itself. So there is no price-wise selling seen over the last few months. And it seems that after this entire time-wise corrective phase, if the stock resumes its uptrend, then we could see another leg of up move going ahead. So overall trend still remains positive for GE Vernova. I think already some consolidation has been seen. So maybe next leg of uptrend could start from here on for a potential up move towards 3,400 to 3,500.
Right, interesting. Okay, that's the take coming in on some of the buzzing stocks in trade. But let's also take a look at some of the losers. While, of course, the latter part of this year has been really marked by some of the bottom-up plays, IT clearly being one such case in point. But where else, Richard, do you sense that there could be that catch-up trade which could be at play? Sectorally, thematically, anything that you're spotting in terms of a trend?
So IT definitely, as you said, has been one of the sector where we have seen a good outperformance. I think auto is another sector where we should see a good up move from here on. If you look at positional structure, then during mid-August, September, post the GST rate cut announcement, we did see a good run up for about 2.5 months. Then we witnessed a good consolidation phase so far in last 2.5, 3 months, which just seems to be a time-wise correction. And now there are chances of a resumption of that broader uptrend. You see stocks such as Maruti, Bajaj Auto, TVS Motors. The structure remains quite bullish over there. So I think auto would be one sector. If one is looking for any sectoral up move, then one can expect good momentum over there.
That's on a couple of those sectors. But Richard, before we let you go, just to get your take on where do you think the market could be tomorrow, given that we have the weekly Nifty expiry. And this week we have back-to-back expiries, given Thursday is a holiday. The monthly Sensex expiry is also there day after tomorrow. Do you believe that the cheer that we've seen on the street today could last for the next couple of 2 days, given that we have these expiries playing out?
Yes, I believe it should, because the major factors that were worry for the market for throughout this entire expiry were the FI selling and the INR depreciation, which we have seen. But in last 2-3 sessions, both of them have reversed, where the FIs, we have seen buying figures coming in. INR has at least shown a good pullback move from that 91 mark to 89.5. So I think these factors would lead to some positive moves towards expiry, where some of the short positions would get covered. Also on the Nifty front, we have not seen a breakdown below the 50-day EMA in this entire consolidation of this series. So overall momentum seems to be on the positive side, and going in the expiry, we expect Nifty to head higher towards 26,300, which were the recent swing highs. So the biasness remains positive, and we can expect some range of around 26,250, 26,300 in next couple of sessions itself.
And Ruchit, your quick take on India VIX. We've seen a little bit of a spike yesterday, but it still continues to be under that 10 mark. Is that indicating a fearful sentiment in the market despite the kind of move that we've seen today?
Well, I think VIX also we have seen a quite lower level, compared to past, but there are no signs of worry of such 1 or 2 sessions of pullback. Because if you look at the entire trend for India VIX, then it has remained on the downside or sideways itself. But I don't think just 1 or 2 trading sessions of any up move towards 11 also, if it comes, then that should be much worry of for the market. So VIX are quite trading still at lower levels. Till it is there about 10.5, 11, one should not think too much into a small bit of bounces over there.
Right, okay, Ruchit, we'll leave it at that. Thanks as always for taking the time out and joining in. Let's quickly begin winding up for the day. And the last 2 days actually for the equity markets have not been all that bad. That Christmas effect or Santa Claus rally, if you will, clearly seems to be at play. I mean, it's been a good 1,000 points on the Sensex alone in the last 2 trading sessions. And the Nifty as well. Now, at least on the futures, you've got 26,200 back inside. So who knows, before we close the year, maybe we once again take a hit at that all-time high. But yeah, 85,559 is where we're shutting shop for the day for the Sensex as well. And it's been a good market breadth. And I think that's been the, underlying strength of the market, that it's been not restricted to just large caps. Having said that, the large caps as well have powered up, today. Look at a Shriram. And it's been a staggering move both on Friday as well as today that you're seeing on the stock price. Good follow through. You've got Wipro, you've got Trend, which has held higher by about 3.25%. Infosys has held strong by nearly 3%. And leadership names like Bharti, it's a solid move by Bharti today, almost touching 2.5% off again today. Other than that, of course, Tech M, Bajaj Auto, HCL Technologies, largely it was a tech flavor when it came to the large caps. From within the broader market, it's been all about defense. Other than that, some of the railway plays as well held out well. So Mazgaon, you had a Solar Industries, RVNL, Titagarh, GRSE, MTA Technologies, Cochin Shipyard. All these names have sprung up very, very smartly in trade. And then, of course, some of the losers as well, a Chola Finance, a Dixon, Samman Capital, TI Industries, etc., were a handful of laggards as well.
And some of the defense names, the railway names have done very well today. They were the top gainers from the Nifty 500 group of stocks. Something like a Jupiter Wagons ending higher by 20% move. Cochin Shipyard, RK Forging, Solar Industries, Garden Reach, Mascot, Devyani from the QSR space spruced up very nicely today, as was the case with Poonawalla FinCorp, a 5% uptick over there. KEC, Titagarh, BEML, Chambal Fertilizers, Nalco Hindalco doing well on the move on silver that we've seen. Silver hitting an all-time high, that did well. On the flip side, some pressure on Hexaware, Siemens Energy, Dixon Tech, Madison Sumi, Swiggy, PVR, Patanjali Foods, Tube Investment. These were some of the top losers when it came to the overall Nifty 500. But Nifty Realty ending on the flat line. Other than that, everything else ending in the green. So it's been a good day of trade for us. Let's see if this exuberance continues tomorrow as well. Remember, we have the weekly Nifty expiry at play. But on that note, it's time's up on this edition of Closing Trades from Ayesha, me, and the team that put the show together. Thanks so much for tuning in.